Thank you both gentlemen for participating in this session. This is going to be a 3-day session during which we intend to cover 3 powerful techniques that you guys can start applying in the markets as soon as you complete studying them. In other words, as soon as we complete technique number 1, I should expect you trading with that technique and sharing your results. So tomorrow we cover another technique. I expect to see you using it and sharing your results. You remain in the college. You become a member of the college, and you should be able to share your experiences with me, and I will be able to guide you from time to time just in case there's a challenge. But I also expect you to build new strategies out of what you learned today, tomorrow, and on Friday. Okay?
Okay.
So number 1, I would want to say this is a trend following strategy. So you better get note of that. This is a trend following strategy. And because it's a trend following strategy, I would expect that you observe trend. I expect you to observe trend. You have probably heard of that concept, that trend is your friend. I'm sure you've heard of that concept, right?
Yes.
So we are going to follow trend with this strategy, and I will show you exactly what to do. Number 2, we are going to take a trade at support and resistance, SNR. We will enter our trade at a support and resistance. Now, this time, why I told you this is a unique program, this time the support and resistance is clear. It's very objective. It's not one you will guess that is it the right one or is it the wrong one. It's clear. I will show you exactly how to get one. Number 3, you are going to trade after a breakout. You will trade after a breakout. A breakout confirms that either the bulls are taking control or the bears are taking control. So we will follow the breakouts, okay? Number 4, we will have to wait for a retracement. We will wait for a retracement. Let me just do that here. Okay, a retracement. But now, lastly, we place a trade at the rejection. Our trade is being placed at the rejection area. Okay, so this is a 1 candle expiry. Okay, 1 candle expiry strategy. So off from the beginning, we are going to trade calls in an uptrend, and we are going to trade puts in a downtrend. That is the right way to face the market. If you know the market is trending up, follow the bulls. Okay? If you know the market is trending downwards, follow the bears. That's the logic. Now, what you have on the chart, you can see my template, right? This is all you need for strategy number 1. This is all you need. I will share the template, or you can construct yours, okay? Now, let me take you over to what we need. Let me see what I can, I want to grab something from here. But I think you have taken note of this. You can always watch the video because I think I'm also recording it, but you can also record it if you want. So I want to clear the chart. One way I can do that is to take a screenshot of my chart. Okay. So these are the things I expect that you guys will be able to follow. Okay.
Okay.
I'll share this with you.
Okay.
Okay, but if you want my template, I can send it to you, but it's something I'll show you how to create one very quickly right away. So how do we then proceed from here now that you know we need to follow the trend, support and resistance and the rest? Let's begin from the start of the day. The start of the day. This is Euro USD 5 minutes chart. Now, the strategy I want to show you ideally is supposed to be treated as a lifestyle. This is supposed to be treated as a lifestyle. It is not where you sit and start trading and trading and trading and losing several trades. This is a case where you place a trade, wait for a trigger. I'll give you an indicator that will tell you when price has come to your level. All you have to do is enter trade. Lifestyle. And for that reason, the best time frame for this strategy is M30 and M15. Okay, 15 minutes and 30 minutes. So step number one, trend. You can take a note. Step number one is trend. So from the beginning of the chart, because I want to manage this chart, I'll need to move it down so that my controls are not affected above there without also interfering with things. Still, you can see that. Let me zoom it a little bit because I need some space to explain things. Very good. I want my pairs visible down here. This is Euro USD M15. We can also try M5. M30 is the most appropriate when you trade this as a lifestyle. I'll show you exactly what it is. Now, let's assume we are trading M5. Starting from the beginning, I'm having a 21 exponential moving average. That is the only indicator we have on the chart. Okay? Are you following, guys?
Yes.
Yep.
We only have 21 EMA applied to close, like you can see on my chart. The reason we have this line is to simply tell us the direction of the market. That is it. There's nothing more. If you are able to see where the market is headed with your naked eyes, you don't need the line. But the line visually helps a number of us when we are very busy. When I come and look at it, I see, oh, market is up, market's down. So how do we use the line? 21 EMA. When candles, when I say candles or say price, I mean the same thing. When price is above the moving average, we are in an uptrend. So this is an uptrend, okay? This section is a downtrend. This section is an uptrend. All of this is an uptrend, short downtrend, uptrend, downtrend, a little bit of a range, uptrend here, downtrend here, uptrend here, and now we are in uptrend. So when price is above, or when candles are above the moving line, we are in an uptrend. When price is below the moving line, we are in a downtrend. Any time frame, the indicator will still be able to tell you what it is. Still uptrend, downtrend, downtrend, uptrend. Simple enough, right?
Yeah.
Now, that is step number one. Remember, we have 5 steps. Step number 2. Now, in step number 2, you will identify 2 bar reversal candlestick patterns. 2 bar reversal candlestick patterns. Now, 2 bar reversal candlestick patterns are like this. Let me show you what they are. They are things you are used to. Probably you didn't know. When you have a bar like this, a red bar followed by a green bar of any size, whether they are wicks or no wicks, okay? This is a 2 bar reversal candlestick pattern, okay? When you have this kind of pattern, somewhere here, followed by a red of any size, that is also a 2 bar reversal candlestick pattern. Are you following, guys?
So it can also engulf. Huh?
It can engulf, it may not engulf, so long as, call it color change. Call it a change from red to green or green to red. Are we there?
And then it reverses the market, or?
No. We identify the, we are going to set up the signal itself from there. I just want you to be aware of this because we'll be drawing on support and resistance based on this pattern only.
Okay.
So maybe a few examples will help you understand what you're talking about here. This is an example of a 2 bar reversal. This is an example, 2 bar reversal, 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 2 bar reversal. You can see there are very many.
All of them.
Yes, all of these, but of course, the ones we trade are going to be specific when a certain criteria is met. Are we there? So you only need to identify a 2 bar reversal candlestick pattern on your chart. The most recent, that is unique. The most recent, in other words, look at this. When you are trading live, the most recent is this one. Are we there?
Yes.
You don't have to go back here and start drawing your lines here. You draw your line on the most recent reversal pattern. This is bear bull. You draw it at the bottom. This is a bull bear. You draw it at the top because the market changed at the top. Here the market changed at the bottom. Are we there? Market changed at the bottom. market changed at the top, market changed at the bottom, market changed at the top. So that's how we draw our support and resistance level. So if we were to wait for a setup and no other pattern like this has formed, because all of these are green, 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 assuming we have no other candle like that, no pattern like this in the future, this is the only pattern we have. So we have drawn our support and resistance, and we are waiting for another factor, a breakout. So are we okay with identifying bull, bear, bear, bull setups?
Yeah, but I need to ask the question.
Yes, please ask.
Now, this last line you draw,
Uh-huh.
this last one.
This one?
Yeah, this one identifying the two candlestick reversal candle.
Yes.
What would I call this? Is this a support or a resistance?
Where do you call? So say that again.
What would I call this line? Is it a support or a resistance?
If price is above your line, of course, that's support. If price is below your line, that's resistance.
Okay, so now this is
a support.
This is support.
If I drew it here,
so
this is resistance.
That's a resistance.
This is a support.
Okay, because now because the change, the red candle change it, made the change from the green to red. So now it's called is it? Am I getting it?
Yes, you see, this becomes support because the seller stopped there and the buyers took over.
Okay.
The sellers will stop at support. The buyers will stop at resistance. Okay. So these were buyers, they stopped here. These were sellers, they stopped here. So again, we are not identifying a signal yet. I'm just showing you the setup. So number one, you use the moving line to identify the trend. Okay. Number two, you identify a candlestick pattern, which I said is a 2-bar reversal pattern. So whenever you see a pattern like this or a pattern like this, you can draw your line above or you can draw your line below, depending on which one is which. Okay? So that will give you your support and resistance level. Number three, in this strategy, you wait for a breakout. Okay? You wait for a breakout. Okay? Now, there are rules you need to follow to validate a breakout. I will show you exactly what those rules are. So the rules you follow to identify a breakout are this. And I know most of us get it wrong a number of times. So let me draw some things. You tell me whether they are breakouts. Okay?
Okay.
If I drew this, do you agree this is a bearish 2-bar reversal pattern? This one I showed you. This one.
Yes.
Yes.
It is a reversal pattern. This is also a reversal pattern. Okay? But assuming we are trading this as a reversal pattern, this candle that closed above it, do you believe it's a breakout candle? This one?
It is.
Okay? Yes. All right, let me show you another example. And then you tell me whether that was a valid breakout or is not a valid breakout. Is this a breakout candle? The green that closed above. Sorry?
It's a breakout. It's a breakout.
It's a breakout, right?
Yes.
This is also a breakout, correct? This one?
Yes. Yes.
Just like this one is a breakout. This one?
Yes.
Very good. Now, I want you to look at specific breakouts here. That's what will make your strategy tick. Unique breakouts, and I'll show you a clear setup at the moment. So step number one, this is a 2-bar reversal pattern, assuming when you were on your chart, the latest candle was this one and this one. You can see the two candles, these two. So when you entered the market, this candle formed, this one formed, the others had not formed. Okay? What you do is you will place a line at the close of the body, all right, and at the close of the wick. Those two. Follow me closely. Okay.
There's a line on the close of the body of the red candle.
Yes, yes, yes. Because this is a bull bear. Let me draw using this guy here. Let me use a shape. Can you see that?
Yes.
From the highest body to the wick. Now, this is candle 1 and candle 2. The body closed here, and the top wick is here. Are we there?
Mm-hmm.
All right?
Yeah.
Now, what you do, so we have covered how many things. The trend is up. We have identified a bull bear pattern. That is a 2-bar reversal pattern. Step 3, a breakout has happened above our resistance zone. We are dealing with zones here. Okay?
Okay.
Now, after this kind of breakout, number 1, the rule states that this candle must close above both the body and the wick. And the part of the candle above the zone must be at least 30%. You can use your eyes. 30% is like 1/3 of the candle is above the zone. I mean, you can manually, you can actually, with your eyes, you can say, okay.
The candle that breaks out. Huh?
Sorry?
A third of the candle that breaks out should be above.
Yes, 30% of the body of the candle that broke out must be above the breakout zone.
Okay, okay.
So look at it. For example, here, this could be 1/3, a second, third, somewhere here. So you see a whole like 40%, 50% is above the zone.
Mm-hmm.
Are we there?
Mm-hmm.
So after that has happened, but you must also ensure one rule. I'll share the rules in written, so don't worry. I want you to grasp the concept first. So trend is up, number 1. You have identified a bearish, you call it a bearish 2-bar reversal, bearish 2-bar reversal, okay?
Mm-hmm.
Bearish because the market tried to reverse to the downside. Then step number 3, a green candle or a bullish candle breaks above the zone or above the wick, the highest wick. And the body of the candle that broke out must be at least 30%. So if you have 40%, 50%, that's fine. But at least 30% should be above the zone, which is the case here. Now, there is one more rule you need to follow the breakout candle. The breakout candle cannot start inside the zone. It must start below the zone.
Okay.
See this candle here? It started here. If the candle opened inside here, that is invalid. It must open outside the zone. If you are going up, it must open below the zone. If you are going down, it must open above the zone. Are we there?
Mm-hmm.
Okay? Now, after that rule has been met, you wait for 1 or 2 more candles, 1, 2, 3, 4 more candles. I'll show you when to wait. Then a candle must retrace or come down to the zone. Are we there? A candle comes from the top to the bottom and touches the bottom of the zone here. You can see that? And that's exactly where you place your trade. And the expiry is the close of this candle. So if you are in a 5-minute time frame, and by the time the candle is touching here, you can use your timer, candle timer. I know you have candle timers on your charts. When the touch is happening here and you have 3 minutes remaining, then your expiry is those 3 minutes remaining. Now, most brokers like IQ, you can be able to pick the end of the 5-minute candle exactly. So it can pick you 3 minutes, 2 seconds, whatever it is. So the expiry is the close of this candle.
The candle that touches the bottom of the zone.
The bottom of the zone, not the top, the bottom of the zone.
Okay.
Now, the logic, because I want you to be good traders also, the logic is this. Every time there is a clear breakout, the market will retest the level but will not break it.
Come again?
I'm going to say that one. I'm going to say that again. Every time there is a true breakout, most of the time, if we have a true breakout, after 1, 2, 3, 4 candles, the market will come back to the zone that was broken to test it. Okay? Now, what we are benefiting from is this. This is a sure breakout. Look at how the candle is very strong. most of it is above the breakout zone. Now remember, number one, resistance is supposed to stop the market from moving up. But these guys called buyers were strong enough to break above the zone and even add an extra body to the upside, meaning this is a sure breakout. Now, once a breakout has happened, price will obviously, in most cases, come to test it. And because this is a range, the bottom is here, the top is here, you expect that because the trend is up, the breakout has happened, support is here, the body where the body stopped, you expect that the candle will not break below the lower level. And so if you place your trade here, the candle will hit this level and even move down a bit, but it will always close above it, 80% of the time. The strategy I'm sharing with you has a win rate of 80% on average. Okay? So let's pick another setup. Let's pick another setup. Yes, ask please. Ask. All right.
After this breakout candle,
yes.
If do we need? Let's say, for example, this one is the one that broke.
Yes.
And if this one was not there, this one.
Yes.
Then the second candle after breakout retraces. Will I take a trade?
Yes.
Okay.
You can trade the first candle after the breakout, the second candle, or the third candle.
Okay.
What becomes a problem is if there are too many candles after that. In other words, a trade becomes invalid if you have another 2-bar reversal like this.
Okay.
So if this was bullish and this one was another one, and maybe price went above this level, then we follow the new level and not this one. Are we there? I'm saying this. On this level, we have a 2-bar reversal pattern. Can you do that? So what you need to do is, if market comes to touch this level, before forming new levels, you can enter a signal. Now remember, by the time this candle is retracing here, you are not sure whether this is going to be a level or not, because it can come down and close above. Anyway, let me show you one more example, then you can ask me questions. Maybe a downtrend.
Can I ask when we are there?
Please ask as we are here.
I've seen this. Is this a valid level?
Just a moment. Let me make this a better zone, a clearer zone. Yes. Which one is a valid level?
The one I've drawn here.
I can't see where you are drawing. Oh, on the right side here.
Yes.
Now that will not be a valid level because there is a new pattern here.
Oh.
Can you see a new pattern here?
This one is one is bullish, one is bearish, one is bullish.
This is
so the bullish one invalidates the bearish one.
So we have this pattern if you were to trade to the downside, and there is this pattern if you were to trade to the so this is a valid level like you are putting. Bull bear, this is a valid level. This one. Yes. That's a valid level.
And where should be the line? Should it be on the green or the red?
Let me clear the chart for your case.
Which should be the,
all right.
the way to draw lines?
So let me help you understand that. Now, for this part, I hope you are here.
Yes.
This is where the body is. Can you say that?
Yeah. Yeah.
And this is where the highest wick is.
Or you consider the highest?
Yes. Always, it is the body and the wick. The body is here, the wick is here. Are we there?
The highest.
Yeah, this is, maybe I'll know whether I'm going, let me zoom it again like this. Okay? So we have this and we have this. So this is where the body is. Okay? You know, sometimes you have to zoom to see the things clearly. This is where the body is, and this is where the the wick is. And so what you are expecting is the market will close above the zone and come test the level. And you buy the setup. Okay? Now,
So in this case,
of course, your entry was supposed to be here. Let me pick a new color. Your entry is supposed to be here. But there is a reason why this is an invalid setup, and I'll explain why. Okay? This is an invalid setup. I will show you why it's an invalid setup. Okay? Yeah, but at least the logic is you have drawn the correct level here and here. And you're waiting for market. Sorry?
I can already see the breakout candle is only a third which is above.
It's okay, but there's a problem. Yeah, but there's a problem with it. I'll give you that condition as I explain.
Okay.
But if you were careful enough, you would have also noticed a number of things. Of course, many wicks around this market area. But now that you ask, let me give you the reason why this is an invalid setup and why the other one was a valid setup. Now go back to the chart. Now look at this candle. Okay? The market just opened and went down straight. It did not go up, stop, and then go down. So there is one extra rule for this setup. You ensure that the candle that is coming to touch your level, the signal candle, this one, does not start by going up, stop, then start going down. Are you following me?
Okay.
The reason is simple. If a candle starts by going up and then stop, go down, it means it has found resistance. I am saying this. If this candle started by forming a wick, it went up, it opened here, went up a little bit, then decided to go down. That becomes invalid.
Okay.
And the reason is very simple. If price starts by going up fast, then decides to change direction and go down, it means it has found resistance. And if it has found resistance, it's likely to continue moving down.
Okay.
So there, when you are doing back testing, it may be difficult for you to know whether it went up fast, then went down, or went down, went up, and then went down. Are we there?
Mm-hmm.
But when you are in a live market, you must ensure that the candle does not go up fast, then decide to go. It should open and start going down. Okay, so let me give you a bearish setup as I explain more of the rules. I think those are the basic rules, but I explain more of them.
Hello, Bernard.
Yes?
Yeah, just before you move on, can you move backward? Because I didn't get where the entry point for this kind of
For this setup?
Because for this setup, because my kids were disturbing me, so I didn't get the entry point.
You want me to repeat all the rules, right?
Yes, please.
Okay, rule number one, when market is above the 21 moving average, we are in an uptrend. So you only try to trade calls or higher options in an uptrend and the lower options in a downtrend.
Downtrend.
You're okay with that?
Yes.
Now let's focus on trading a call option because now in this section, the market is above the moving average. So you only think calling and not putting.
Okay.
So after identify the market is up, look for a 2-bar reversal pattern where one is bullish followed by a bearish.
Mm-hmm.
If you are going the reverse, you would look for bearish followed by bullish. Okay?
Yes.
So here is the pattern. We have a green candle followed by a red candle. Then what you do is you draw 2 levels at the body and at the highest wick. There are 2 wicks. The higher of the 2 wicks. Okay?
Mm-hmm.
So this is the body and this is the wick. So to make your life easier, go to insert, you choose shape. You can see that?
Okay. Yes.
Then you choose a rectangle. That way you can draw something like that.
Okay.
Are we there?
Yes.
So after you have drawn something like that, you wait for more conditions. The condition next is A candle must open below the zone you drew, this one. Open below both the lower line and the upper line. So you call it a zone. Open below and close above. Are we good?
Yes.
So if that has happened, now let me delete some of these lines. Now, this is the candle that closed above it, above the entire zone, the range here. Now, you must ensure that the candle that closed above the zone, at least 30% of the body is above the zone. 30% of the body is above the zone. Are we there?
Mm-hmm.
As you can see, in this case, almost half of it is above the zone, which means you are good.
Okay.
Now, you wait for the next candle or the next candle or the next candle to come and touch the bottom of the zone, because we are entering a call. There is this.
Okay.
This is a weaker support. This is a stronger support. Sometimes the market can reverse from here. Sometimes it reverses from here. I trust the lower level more than the upper level.
Okay.
So you wait for the market to come all the way to the bottom of the zone, touch the zone, enter a call to expire at the close of the candle.
Okay. I get you now.
I'm going
I get you now.
I'm going to shortly end the session and share again. I think